please give him a warm round of welcome, and I'm delighted to have you with us. Gents, welcome. If I can ask you to give a quick intro to Midsquare, what it is you do, the nature of your business. I think you come from the traditional finance markets. Just for everybody's benefit, I think at this stage in South Africa, we're still mostly a retail market. Most of us here are retail investors. But just to give them a bit of an overview of what it is you do and what you see in crypto, what's coming up.
Okay, guys. Hannes, thanks to you and your team very much for having us. It's really great for us to be here. We have one other partner in Midsquare, is probably hovering around somewhere in the back there. So it's three of us. We all come from traditional finance. So you see the big yellow signs here in front of you today. We come from the big blue. So the Sanlam hands, we spent collectively between us 60 years at Sanlam in the traditional asset management side. And about 18 months ago, we decided to come and join you guys on the exciting side of the world. And we started our business called Midsquare. Midsquare is effectively an asset manager that focuses on managing assets or digital assets for clients. The reason we set up Midsquare, and we'll talk more about it in a little bit of detail, is really because we wanted to provide a professionally managed solution for people who want to invest in crypto and don't want to do it themselves, simplistically. I know a lot of you guys here do it yourselves, but there's a lot of people out there who are afraid, they don't want to operate with wallets and self-custody and all of that. So simplistically, what we do is for those people who don't want to manage their crypto themselves but want to invest in crypto, we offer a fund. People can invest in the fund, and then we do our very best to give them good returns.
I think there was a big moment 2 weeks ago on YouTube when one of the bigger modelers out there, a guy called Plan B, announced that he's moved his crypto out of a private wallet into, I think it was the black one, and people went absolutely bananas. So how can we do this, And he said it's very simple. I know the custody is safe with BlackRock. I think the fee, I'll talk on a correction, is 0.1% per year. That's something he's quite willing to pay. And he says, then I don't need to worry about custody. I'm still in the market. I've still got exposure. The Bitcoin is just somewhere else. It's with someone else as a custodian. And they're a regulated financial service provider with the US SEC. So that was quite a big moment, I think, for a lot of people. Looking at South Africa, before you guys came up, I talked about that BlackRock ETF. Give us a bit of your view of what you think is next for South Africa and what we can expect from the institutional market, how you see that developing in the crypto space over, let's say, the next 12 to 18 months.
Okay. I'll start, Sal can chip in. So I think the regulator here took big positive steps, let's call it 2 years ago, when they took a view and said we have to license the space, and everybody who wants to be a crypto asset service provider and offer services to clients, whether it be us or Binance or anybody else, needs to be licensed by the regulator. That just means that customers have protection. It means you can't get somebody, well, you still can get them, but they're going to be in trouble. But people are licensed and they need to provide services under that license. So that was step one, and I think very progressive. What they haven't done yet is they haven't opened up vehicles. So you talk about ETFs, Hannes. An ETF here still can't invest in crypto because the regulator hasn't said that regulated vehicles like ETFs or unit trusts or pension funds can hold crypto yet. When that happens, I expect you'll see a lot more institutional adoption. Asset managers like Sanlam and Alan Gray and others who have unit trusts will start investing in crypto. But for that to happen, we need the regulators to start moving a little bit more and taking the next steps in terms of allowing those regulated vehicles that we operate with here to actually hold crypto underlying.
You mentioned the ETF. It's a very difficult question, but how far do you think we are from seeing the first Rand Bitcoin ETF in South Africa? What my realistic view is versus what I want, I'd like it to be sometime this year. Unfortunately, I don't think that's going to happen.
Yeah, my best guess, someone can give you what his best guess is, but my best guess is probably 2 years out.
So I don't know if you guys are familiar with the hedge fund industry in South Africa, but we've seen this movie play out a little bit with how the hedge fund industry has developed within South Africa. And it feels a lot like, when we started our business about 18 months ago, we told ourselves it feels a lot like where the hedge fund industry was maybe about 10, 15 years ago. And one of the big levers that needed to be pulled was getting the regulators to get the vehicles regulated. Once they pulled that lever, the industry has started to grow and develop quite nicely since then. And I think, to Nathan's point, for the institutional market, and especially from a product perspective, the regulator is your friend here, right? They provide, clarity, they provide governance, peace of mind for us as investors. We need them to come to the party and actually say, yes, okay, these are the certain vehicles, this is what we approve, this is what we don't approve. And it actually provides them a bit more clarity of how we can actually go and approach this thing. So, yeah, again, to Nathan's point, it requires some engagement though. And I think, people like us are beginning to engage with the industry, and there's a lot more people like you as well. We'll all will have to engage with the industry to actually get this thing done, or the regulator.
I always compare crypto to the early days of the internet when everybody thought there's this famous article, I think it was in the Wall Street Journal, where they said the internet thing is just a phase, it'll come and go. It didn't. Then it was e-commerce. It was just a phase. There was a bubble that was going to come, that came and went. It didn't. It stuck. And now we're in the internet of money. I spoke to someone who's an investigator with the Hawks this week, and he says, I know crypto is here to stay, so we got to make it safe. So even the law enforcement agencies realize that this is here to stay. We've seen Michael Saylor for the last 12 to 18 months gobble up via MicroStrategy, that's now Strategy, gobble up as much Bitcoin as he can possibly get his hands on. He's got what a lot of people call the infinite money glitch. In the US, you can find yourself with bonds and convertible notes at ridiculous coupons. I mean, some of these things, if I say coupon, it's like an interest rate. And the interest rate on these things are as low as 0.1%. And he just keeps issuing those and he keeps buying Bitcoin. Now, last 2 weeks, we've seen the first South African company, an Altvest, start putting Bitcoin on their balance sheet. Can you give us your view on that? I think it's very exciting. Just what you think about it, and again, difficult question, who you think we can expect it from next in South Africa?
We actually had a chat about Michael Saylor earlier. Salman was telling me he's becoming a systematic risk, because he's acquired so much Bitcoin, he's buying it on credit effectively. If you have a serious dip in price, what is the liquidation implications of all of that? But we can park that. I think what you're seeing definitely in the US now, I think it's something like 22 or 26 states that have bills on the table to consider adopting at a state level Bitcoin as a strategic reserve asset for a number of those states. Then at the federal level, considerations there around Bitcoin strategic reserve. Whether it happens or not, I don't know. But I think what's probably more relevant in the discussions around it is that it does create some form of game theory. Because imagine you're sitting in China and you hear that the US is considering acquiring Bitcoin to hold, on balance sheet as a strategic reserve asset. What do? Do you just leave them to do it, or do you start also buying Bitcoin? There's other S&P 500 companies. We know Marathon Digital has also started adopting Bitcoin as a strategic reserve asset. So I think that will continue. Where does it come from next in South Africa? I mean, Altvest, it's nice. I think they bought 0.8 of a Bitcoin or something like that. So it's a nice start. But I think what you want to see is a big balance sheet to it. So you want to see like one of the life companies or banks, take a position, and I think that will really set the cat amongst the pigeons. But I think some of the banks are building nice blockchain teams. Are they going to take balance sheet positions yet? I don't know. But I think once you have an ETF, you'll start to see more of it.
I think the key thing with the banks are they've got their prudential capital levels that they need to maintain. You'll need the central bank to come on board and say, okay, well, we will now allow you to keep, be that in stable coin or be that in Bitcoin. I think that'll be a big day.
Yeah.
But I think South Africa's always been a follower, and I think it's safe that way. You'll probably see some of the US banks do that long before we do that in South Africa. Moving on a little bit, and again, please, this is our observations, not investment advice, but I do want to talk a bit about the drivers of what we see as the bull run and how we see that developing. I think one of those drivers is always the halving period. It's like a numerator and a denominator. One of it's always the halving. The other one is liquidity and just simply how much money is out there. We spoke about this briefly before we came on stage, but I mean, the world's two biggest economies, the US and China, we always have to remind ourselves South Africa is very small in this context. It is very much about those two markets. Just your views in terms of what drive their liquidity. I'm very happy to give my views at the end as well, but I think the US and China, what will drive those liquidity cycles and those interest rate cycles?
Yeah, so I'm not sure how much you follow on the macroeconomics and what happens globally. The interest rate cycle is a big informer of where liquidity is in the market. One of the big drivers last year, or actually you lose track with it, was the expectation and the anticipation of the cutting cycle coming up from the US Fed, right? Which eventually came. It was delayed, but eventually came, and it actually spurred the market around quite nicely, coinciding with the election and all the sort of stuff. Great, right? Provided some stimulus to the market. People have some excess cash. It goes into savings, investments, and stuff, and which actually led into and propelled the prices a bit to the back end of last year. But there's fears. There's fears at the moment that is there much more legs in this in the cycle? Are we going to start actually withdrawing some of the liquidity from the system? The Fed chair is starting to talk about, he's a bit concerned about inflation in the short term, so he doesn't really have much more capacity to actually cut interest rates much further. So it actually is putting a bit more concern into the market. It started a bit of let's call it the risk-off environment, of the last couple of weeks, fueled with what has now become a bit of an issue in February, which is now become the tariff issue coming out of the US. Tariff issue just means that the US is charging the next door country, now in this case China, Mexico and Canada, but yesterday he announced that he wants to start tariffing Europe as well. What it effectively means is it's a tax, right? So you charge extra for stuff coming into the country, that potentially will get charged into the consumer. The consumer has 25% less to be able to spend on either discretionary spending or potentially investing as well. So those are the concerns that are floating around the market, which actually leads right directly back to your question. It dries up liquidity and it dries up, disposable cash that we can invest in, take some risk, invest into Bitcoin, invest into Ethereum, Solana, etc. So yes, liquidity is a big, big, big driver. We have been rewarded in a quite highly liquid environment. There is concerns starting to float that we may be entering into liquidity starting to taper off, and we may be getting to a bit of a, let's say, drier patch.
Yeah, maybe the only couple of things I'll add. So on the China side, the issue there is the property sector. Okay, that's what's getting the Chinese economy into trouble, and really the only answer there is printing money. So you should expect to see massive injection of liquidity into the Chinese market to rescue that property sector there. In the US, the issue very simplistically, so Salvan spoke about the tariffs. We started a rate cutting cycle. It's been much shorter than everybody expected. You would have expected, and I don't know how much you guys are familiar with quantitative tightening. Is the opposite of quantitative easing, which is putting money into the system. We would have expected quantitative tightening to stop. By now it hasn't. Okay, until quantitative tightening stops, you don't move to quantitative easing, which is when liquidity and money gets printed and pumped into the system. When you get quantitative easing, you have that excess liquidity. That's when risk assets will typically run. So we haven't seen quantitative tightening stop. We shouldn't expect to see risk assets do well until quantitative tightening stops. You will typically see quantitative easing coming, and then hopefully we'll also see some easing in the rates. The positive factor is that the US president understands the need to have lower rates, so he will do things like tariffs now, which should ultimately have in the medium term the benefit of lower rates and more liquidity in the system, which will benefit risk assets. So I heard in your introduction there you said you think we're in a transitionary phase. I think we would tend to agree with that. But there are clear things you have to watch. If we don't get some form of easing and some form of liquidity coming into the market, it's going to be tough times for risk assets.
One thing I want to add to that is just the debt levels of both the US, which everybody talks about, and I think secondary to that, also the debt levels of the Chinese or China. The US interest rates still got a lot of room to be lowered. The Chinese don't. The interest rates are very low. So what happens if you get to 1%? The only thing you can really do is put more money into the market, and that's when the fun starts. Don't forget how many people in China and India are in crypto, buy crypto actively. So there's a lot of retail buy pressure that'll come from there. So again, this is an observation, but I think that's where a lot of that liquidity will come from. The US, Trump very famously said he wants a weaker dollar. You're quite right, I forgot about that. The tariffs is the first step towards that. That'll weaken the dollar. And then lowering interest rates. If your interest rates in South Africa, as an example, is higher than in the US, all other things equal, you're going to come to South Africa to invest your money in that interest rate. And that's obviously one of the drivers of exchanges. Last question for you guys before we open the floor for Q&A. Back to South Africa, the move from retail adoption to institutional adoption. Obviously, I'm going to use the JSE an analogy. With any exchange comes its evil twin, and that's custody. You can't run an exchange if someone can't hold whatever you trade on that exchange. The JSE is always at straight. If you think back to the days of paper trading, we're now in an electronic environment. And again, I use that as an example, but it is relatively slow. We talk about a T+1, T+2 trading settlement. Bitcoin, we know, is slow. It's 10 minutes. Some of the other coins trade and clear within 10 seconds. Just your views on custody then in South Africa, infrastructure, how you guys plan to accommodate this type of thing when the market starts booming. Where will you look? How will you do it? Maybe talk a bit about cold wallets, hot wallets, and those type of things.
Yes, custody is more complex in digital assets, right? So the first thing is, if you just hold Bitcoin, let's use a simple example. You just hold Bitcoin, then there would be the equivalent of a custodian that you would understand in the traditional world. That would be somebody like Binance could be a custodian. You could offer custody services. Coinbase offers custody services. You look at all those ETFs that got launched in the US. I think, if I remember correctly, Coinbase is the custodian. The plan is Bank of New York will get into the custody. They're a big custodian in traditional assets. They're also going to custody digital assets going forward. So on that front, I think you'll see that kind of trend play out where people are operating as traditional custodians will just bridge over and provide secure wallet services or vaults for custody of digital assets. When you start getting into DeFi, it becomes more complex because then effectively the smart contract becomes the custodian. When you invest in a DeFi protocol, you put money into the smart contract, it locks up there. You're relying on the security of the smart contract to be your custodian. So I think we won't get into more layers of depth than that. But to answer your question, Hannes, I think where it makes sense, we'll use the traditional providers who will naturally bridge across into the custody of digital assets, as you're already seeing in the US. And where it doesn't, for when you use things like DeFi protocols, Aave or Uniswap or whatever, you just have to help people understand the dynamics of smart contracts and the fact that smart contracts are, in a sense, custodians as well, and how you interact with those smart contracts.
Excellent. Good. Can we see from the crowd, is there one or two people or one or two questions? We've got roving mics.
The Trust Wallet and the Binance, what is the relationship?
We own Trust Wallet. That's one of our. It's basically a DeFi wallet. It was a product developed, and I can't remember by who, but we bought the company. I use it myself for one or two of the smaller coins. You can also use our Web3 wallet on Binance. I actually encourage people to do so. The regulator asked me about that the other day. It's the same thing, but you get that regulatory recourse where a lot of the DeFi wallets are anonymous, and that's all fun and games until something goes wrong. You've got no regulatory recourse. Whereas if you use the Binance Web3 wallet, then you can still go to a regulator and say, listen, for some reason I lost my money, and they'll come to us and we'll work it out. We've got that SAFU fund that covers that as well. But just back to the question, the Trust Wallet belongs to Binance. It was, can't remember when we acquired it, it was a company we acquired, yeah.
They're trying to scam me and the Trust Wallet, they made me do the Binance Pay for the thing going to the Trust Wallet and then investing in DeFi, and I just closed it.
And please do that. Again, if you don't know, thank you for you, bringing up that example. If you don't know who you're dealing with, just put the phone down. Guys, block the email, block the WhatsApp. Yeah, just block the WhatsApp, don't speak to them. Very dangerous. That's actually how a lot of people lose money.
My question is for the Midsquare team. So in terms of investment, I hear you talking about investing in DeFi, right? So is that one of the platforms we're investing people's money on? The question I have is that normally with DeFi, there's always that impermeable loss that people suffer because of what happened. How do you guard against that?
Just say that last part again. There's risk.
The impermeable loss.
Impermanent loss.
Yes, impermeable loss.
Yeah, that's a good question. Not many people know about impermanent loss. So for the rest of the room, impermanent loss is a peculiar thing that happens when you supply liquidity into decentralized exchanges. So decentralized exchange is the equivalent of the JSE, but peer-to-peer, right? So for a decentralized exchange to work, it needs liquidity. People need to provide liquidity into that. We happen to do that. But there is a peculiar thing about the way when you provide liquidity into an exchange, you are exposing yourself to impermanent loss. This conversation can get very technical, so we can discuss it offline. But there are ways to manage the risk of impermanent loss. You can take positions that help you mitigate against that. But what I will say to you is, if you don't have a very good understanding of asset management and risk management, it's very hard to understand how to manage that risk. But you can manage that risk of impermanent loss.
Do you do yourselves or I do it as an investor? I invest with you.
You invest with us.
And you do it on my behalf.
We do it on your behalf. We invest and manage the risk on your behalf. Yeah.
What cost do you actually charge for custody?
We don't offer custody services. So there are other people who would say to you, we'll custody your Bitcoin in a vault and we'll charge you for that. That's not our business. Our business is asset management. Yeah.
Just on that institutional market, Binance has got a product we call the CEFU wallet, CEFFU. A lot of the institutional clients use that. I think we charge them 0.1%, so it's our standard fee. But it is a well-known product, and we've had good success with that.
Okay. Hi. I was just following on someone else's question. I think there's on the Binance Web3 wallet, you have things like Lister, BNB, and various other sort of mega drop or things like that. But how do you know which to trust if they're on the Web3 wallet? Are they trustworthy? Because I've had a bit of misfortune with those kind of things.
I think for every new token, the ones we do in Web3 and the ones we do on the centralized exchange, there's always a white paper. And I ask everybody to go read that white paper. It tells you exactly what the project is, what they do. A lot of them have token release schedules that's quite steep. What that means is there's going to be a lot more tokens. It's basically an inflationary measure to make sure that the market cap of that is released into the market in a orderly fashion, but some are quite steep and they release them quite fast, and that dilutes value. Basically, how that works, the launch pool works, is just if you have BNB in our vault, you then qualify to get any new coin we issue. You'll see from time to time something appears in your wallet. It's not a Chinese New Year's gift. You'll get them throughout the year. And if you hold those for a while and you go and you work out what let's call it the yield is, so how many BNB you hold versus what you get through the year, it's quite a tidy sum. So we encourage everybody to do that. And you can sell them immediately. A lot of people sell them quite quickly. I'm not saying buy or sell. I'm saying read the white paper, see what the specific project is about. If you like it, hold it. If you don't, well, it's a gift, sell it. You can't re-gift it, unfortunately, but you can sell it. I mean, there's a lot of liquidity for most of it.
If we were not sort of endeavors to like complete tasks, put your BTC into storage on Lister and like into the S-list BNB. So I was wondering how you know what is trustworthy, not just the yield from holding in a simpler products.
Is that, so you're saying to stake BTC, because I mean, if it's on Binance, you obviously know what your recourse is, you know, we've got the Saylor fund and that should be fine. I think the moment you go, the same goes for the Web3 wallet, but the moment you go into DeFi, just make sure who owns the DeFi wallet, how it works, etc. We prefer, as a central exchange, we prefer the central exchange because we know what the recourse is. You've got recourse to a regulator, you've got recourse to the Saylor fund, and that should give you a certain amount of surety. I think outside of that, just be very careful where you stake it, because we always tell you who the staking party is, and you can then go do your research on them. If you see a yield to an APR that's very high, nothing's for free, so just go check out what it is and make sure you understand who the third party behind it is what I would say.
Okay, it's a very practical question. It's end of February. We have to do our provisional taxes and whatever. Does Binance have statements that it actually downloads to say, you know, what your profit and things is? And I would have a second question on that. So if you draw your money within 12 months, is that an income and then capital gains after 12 months? I just want to know what's the best tax treatment to when I...
That's what I'll need to sidestep because there's got to be tax advice. What I was, I mean, the capital gains period is 5 years. So get yourself a tax advisor on that. Knowing where we are, and we know what happened to the national budget, I think they're going to push you right to the 5-year limit before they see it as a capital gains and not a trading.
Can I just ask something on that? So let's say it increases a lot, the price, and you just take it to a stable coin. Well, you'll obviously already make profit, so you will immediately be seen as...
The moment you exchange one coin for another, be that a token for or a coin for a stable coin, it's a taxable event. Sorry, I don't make the rules. But to your first question, yes, we have a product. Please do a search on Binance Tax. We issue 3 statements every year, so your income statement, your capital gains statement, and I think just a general movement of liquidity through your account. Most tax advisors accept that. They submit them to SARS. So that's a product I don't think a lot of exchanges have. I know one of the others, shall remain nameless, you actually have to write to them and ask for a statement. This is one of the products we offer. It actually gives you an Excel printout that you can then send to your tax advisor and they can calculate it from there.
Okay, thanks.
I just need to ask about why would, I'm currently with Luno, so why would I move to Binance? What difference, what better service would you guys provide opposed to Luno?
I'm always careful to talk about the competition, but what I will say is...
I think you need to.
I think I know our trading rates are much lower. The commission I'm going to ask you is much lower. We've got a far bigger collection of coins. If I look at what they've got available, what we've got available, we've got a lot more. It is a fact that a lot of people use Luno as an on-ramp and then come to us. That's why they've made their withdrawal rate higher, to try to stop people to come to us. When the good Donald Trump was inaugurated, the Trump coin and Melania coin, there was only one exchange in South Africa where you could buy those. So that would be a reason. If that's your thing, that would be a reason. And also, so it's purely the breadth of coins, the number of products. We've got a number of products that they don't have. And then, if you're an institutional trader, stuff like bit offer spreads become important. These guys won't trade on their phones. I'll be very surprised if they do. They start using something called an API. And then the size of that Bitcoin wallet and the bid offer spread becomes important, because what you don't want is one guy bidding here and another guy offering here, and the market's got a spread that you can drive a bus through. You want this to be very tight. You want the volumes to move fast. And that's why the institutional guys come to us. On most of the big coins, we've got the biggest pools, it moves the fastest, and you get the best execution rates.
Thank you. The other question I want to ask is that buying various Bitcoin and Ripple and Solana, et cetera, as I tend to do on a monthly basis. So of course, it's the pound cost averaging, which tends to work quite well. And I'm tending to invest medium to long term. So at the end of the term, I spend of each month, even if one's lost a certain amount of money, so be it. It's the way it is. What's concerning, though, is that over the last few months, Bitcoin has dropped quite considerably from 1.9 to about 1.5. How far is it going to drop? And at what stage do I buy again?
Again, that would be investment advice, which I'll be careful.
Well, I think it's a very good question. It's a very good question.
I would ask you to look at two things. There's a term called dollar cost averaging, where just on a disciplined basis, just keep buying Bitcoin on a regular basis, be that monthly, quarterly, whatever suits your cash flow. The second thing I would ask you to do is zoom out. Zoom out. If you go on TradingView, scroll down, the graph just does this. Have a look at what it does over a 5-year period, over a 7-year period, over a 10-year period. So again, you need to define your own investment horizon. If it's a week, then you're not an investor, you're a trader. Define your own horizon and make a decision from there. You know when you will need the money, and I would say look at your asset on that basis.
And would you say that, would you say that it makes sense to take profit when you can, and then to continue, or do you always leave the profit there? Because there have been times when there's been considerable profits. Does one take one's profits, continue the pound cost or the dollar cost averaging, or leave the profit there?
A lot of things to consider there. Tax is one of them. But again, you need to know what your liquidity events are, what you need the money for. I think most people who've done the best with Bitcoin just stayed in the market. Up or down, they just stayed in it. No one except one person gets the top of the market right. Everybody else is either too early or too late. So I talked about key opinion leaders in the beginning. Someone I follow quite regularly is James Mullally of Invest Answers. He's built a model. He's a quantitative trader. He's built a model that's given him certain levels towards what he sees to be the top, and he doesn't exit at once. He exits in stages. So he'll start selling at a certain level up to a certain level. Of course, no one gets it right. No one gets it right. That person who sold the top was just the right place, right time. I don't even think they knew about it. So it's about the staged exit, and that's something you need to do your own research on. Get yourself 1 or 2 good people you can follow. Some of them you subscribe, I think it costs $20 a month, which is, I know, substantial, but they then avail those models on tradingview.com, and you can see at what levels they plan to exit. I think that's something worth paying for.
Have a demo account on spot. Now Binance doesn't have that. They have it in futures, but not on spot. Why is that?
We try to get as many people on the app with our Binance Lite function. So you've got Binance Lite and Binance Pro. So Binance Lite normally gives you that more simplistic view. The other thing is we want to educate people as much as possible before they start trading. And that's why we encourage everybody, and I do so again tonight, to please use our Binance Academy page, because that shows you where you can do. We did have a demo, fake money type of trading function at some stage. I need to check.
It is in futures, but not in spot.
Yeah, that's because futures is a much more risky product. And again, we actually want people to see how the market moves because it is so volatile. But on the spot page, what we normally ask people is buy 10 rands of Bitcoin. The commission, there's no floor amount on our commission. It's 0.1%. If you want to buy 5 rands of Bitcoin, you can literally do that. So you can do such a small amount that you don't need to wipe yourself out on the spot side.
Okay, but don't you think when you do the demo first, will actually give you some practice before you start. Even if it's 10 Rand, it's still money at the end of the day.
Sure.
So once you practice and maybe you have a strategy of trading, you can practice on the demo before you start using real money. I know the emotion
Yeah.
is not there and it's not the same.
We'll take that feedback back. It's good feedback. We've not had a lot of requests for that, to be honest. So, but we'll take that back. I'll take that back. Okay. Last one from my side, gents. Where can people find you? Socials, website. If they want to look you up, maybe just give us a bit of a steer there, please.
Our website is midsquare.io. That's the easiest place to find us. Socials are all being re-engineered at the moment. So that's the best place. Look for us on the website, midsquare.io.
Thank you very much, everybody. Please give a hand to our guests. Really appreciate it. Thank you.